Good morning, everybody. How's everybody doing on this fantastic Thursday morning? I almost forgot that I am supposed to be doing a public live stream on Thursdays. I guess it's simply because I did a live stream yesterday for the FOMC, and we will be doing a live stream tomorrow for non-farm payrolls. But we are kind of looking at a potential opportunity right here, right now on Mr. Bitcoin. The market will be opening in 7 minutes, so I don't think we missed much of anything. Thank you guys for being here. Apologies on a late start. Like I said, just kind of slipped my mind here. A lot of stuff going on this morning. We have the BOE happening. We had the ECB. We already took a profitable trade on the pound dollar. That's why it is in the top right hand section of the monitor. Unfortunately, that happened early. And other than that, yeah, we are watching Bitcoin here. I know this doesn't look like a long trade, right? Yesterday, today, pump, dump. I mean, it looks like an altcoin, but there's a reason why. Simply because the dollar is weak right now. What we had yesterday on the FOMC is, Powell was dovish, a little bit dovish yesterday. A lot more dovish than people had anticipated. That is for sure. If you look at the weekly structure here on the pound, you did have a definitive breakout to the upside, taking out resistance. Last week we had a pullback, a lot of chop, a lot of slop, right? But here you are coming right back down to old weekly resistance. Will this end up being a buying opportunity? I don't know. I can't see into the future, and I do not predict stuff like that. But what I can do is what I did do is set up a 2-to-1 risk to reward on this. So basically, after we got this and this thing, a lot of volatility coming into that weekly low. I was looking for the low actually to be liquidated. Let me put it up back on the hourly here. I was actually looking for these lows to be liquidated. It did not happen. So on the push back up, I went ahead and market ordered in through a stop position under. Remember, if we're doing the liquidation break strategy, which this is what that is, we wait for the liquidation to happen. We did get a liquidation. It was a liquidation of yesterday's low. This is yesterday's low. So you did take out yesterday's low. Liquidation, good. It looked like it was going down here to liquidate this. Now, the fact that it didn't liquidate that tells me that there is a possibility that this position will eventually get knocked out. But the end game, if you will, of even getting long pound dollar was for the bounce. That's a lot of volatility, right? That's a very deep correction or a pullback or even an outright downtrending move, okay? If you come all the way up here, you'll see this is your London session. So that's your daily range. That's a massive range on the day, isn't it? Yeah, it's a massive range on the day. So I figured at least we could get a bounce down there, and by lining up my entry, well, hell, let me just do it this way because it's already been discussed, recorded, and taken and booked, and it's in the past, right? There's nothing more that we can do. Right here it is. Boom. Today, 7:54 a.m. Last week's low, pound USD. That I think I was answering a question. Someone asked me where I was buying. But there's the setup. Right there. just looking for a 2-to-1 risk to reward. It ended up being a 2.5-to-1 risk to reward. So as soon as it got it there into the 2.5, if you're risking 1% per trade, that's 2.5%. Knock that position down by 2/3 of the position size. My stop is setting at break even. So I am in, I am out. P&L growth, zero risk left on the table, minus the unrealized P&L. So boom, TPMS. It's something if you ever join the Discord, you'll hear me say a lot. Take profits, move stops to break even, and let's see what happens. Because if we do get continuation, then that's just icing on the cake. All right. So we'll see what happens here. Obviously, I don't know what's going to happen. I never do. But you're clearly in an uptrend. You have been all year. You got a weak dollar. You got the S&P 500 right now breaking out. You can see you're back above daily support currently. It doesn't mean it's going to stay above daily support, but the longer it does stay above daily support, remember my entry is here in between these two white lines. So the longer it does stay in above daily support, the better I will feel for the next day or two for this to see if it continues to go up and see if we get the breakout move. All right. It does look like it's setting up pretty good here to get some shorts in the game. So yeah, we'll see how this goes. Also, something of note. Did that make a fresh high? It did. All right. So, yeah, nothing of note. Never mind. I take that back. Just a little bit. My brain just wanders off like that. You'll get to know me. We'll get to know each other real well. Real well. All right, let's get back over here to Bitcoin. What we want Bitcoin to do is pull back. So it can give us an opportunity. This morning we were watching this intraday support. Naturally, there's the breakdown. So I tell my people, if you are looking for bullish entries, for bullish continuation, you watch intraday support, preferably around daily levels, weekly levels. So not really any daily or weekly levels here. So it's not a higher probable trade. Okay? It's just an intraday support. But anyways, what we do is when we get the breakdown here, we wait for the next hourly candle to reveal its true intentions. What I mean by that is if you're going to see a push on the lows, meaning a liquidation down to the lows, typically you'll get that push right after you break through support because you broke through support, right? So it makes sense to retest resistance, roll over, push on the lows, and then do whatever. So what we typically do in a situation like this is we look for a supply test. Now, this does not mean the trade will work. So if you take this entry, you make damn sure that you do this with the amount of money that you do not care to lose. All right? Because there's nothing that says this will work. And like I said, it is not a typical trade talk high probable setup. It is not a liquidation break trade setup. It is not a setup. But if you want to trade it, you have shown this breakdown to be an intraday trap. So in theory, as long as the high of day is intact, which it is because this is 1900-hour candle right there. That's your opening daily range candle. Your high of day is 24,264. I do not see price getting back up there today, especially since we have non-farm payrolls tomorrow. We had ECB today. We had the Bank of England today. You see what I'm saying? Like, a lot of data has just been dropped between FOMC yesterday, BOE, ECB, and then tomorrow NFP. So, not a trade setup that I would anticipate myself ever taking. But if you want, you can. The way that you would have to play this is simple. You would have to wait for price to pull back into 23,805.18, and then you would want to see that level hold. You would not want to see any 5-minute closures taking place under that level. Because if you do, then that means that this is probably being faded. Excuse me. Give me 1 second. Sorry, I drinking a protein double berry naked drink, and it's pretty bad. The flavor's not bad, but it's chalky and disgusting. For breakfast. I didn't realize what time it was. Having so much fun with pound and euro. All right, so here we go. I don't know if you'll get a retest down there. Obviously, we just had the open, and you can see a little bit of selling coming in, but we don't care about a 5-minute sell or 5-minute wick. But we would like to see a pullback down into this area, and we want to see if that area holds. This is the support, so you would not want to see an hourly close under that. Whenever you break down below an intraday support, which you clearly have with this closure, that means you have taken out the operating range. And when you take out the operating range and reveal that to be a trap, you always revert back to the original support. Because this, even though it was a break, was clearly a trap. Now, this will work better on higher time frames naturally, and still will not ever have a 100% hit rate. So when I give you these little clues and hints and stuff like that, please don't think they're going to work 100% of the time. Nothing that I say works 100% of the time. Nothing in trading works 100% of the time. So, but it happens more than it doesn't. And I have data that shows me that. All right. So that's what we typically do. So in theory, as long as we're not closing 5-minute candles under 23,786.76, you should have continuation to the upside. In theory. So that would look like this. That's your trade setup. All right. Stop would go under support because this is the old support. Price should not get under this. All right. Should not get under that. Price is chaotic. and random. So it can and sometimes will. Like I said, if you take the entry, if you get a tag of that and you get long on a market order, that price is 23,805. Let me get it on Bitget here and see what's going on. You are buying pretty much the top also, which is another thing that goes against everything I teach, but hey, whatever. Let's trade. We got to trade. We always have to trade. We always got to be in a trade. No trade today? What? No, I'm just kidding. Here we go. That price on Bitget 23,802 spot 50. That's your limit order buy 23,802 spot 50. Your stop loss 23,759 spot 50. 23,759 spot 50. Let's see if we get the entry. 23,802. Shh. Spot 50. I would not risk more than 2% on this trade because, as I have already said, this is not a trade talk high probable setup. Not. There is no daily, weekly, or monthly levels to speak of anywhere in this vicinity. Not a high probable trade. Take profit. Will be, we do it under resistance 23885 ish. 23886. What is it on Bitget? 23879. Let's go ahead and call that spot 52 for the hell of it. If it doesn't get triggered by the spot 50, I'd be upset, especially if it ends up working out. I'll take the risk with you just because I've had a fantastic week already this week. But it is not a high probable setup. I must repeat and repeat and repeat that so many times. Not a high probable setup. Not. Excuse me. Leverage. I wouldn't use more than 5x. 5x. Once you get above 10x leverage on any crypto platform, did I do that right? I did. Once you get over 10x on any crypto platform, the fees begin to get higher. So the higher the leverage you use, the more money they take from you just by placing you in the trade. So you're already going into the trade with a loss, right? Based on the fee structure. That's why I say you got to manage your risk. You have to understand everything about it. You can't just come on here and wing it, right? You got to know, is this even a profitable trade at 10, 15, 20x leverage? Maybe not. Maybe not. There's been several times when I was playing around with the high leverage that I made 20%. Well, this was with a different exchange as well, but that's why I left. Almost 20% in profit, and then exit the position, and my P&L actually went down. And I was like, that's interesting, seeing how I just exited a 20% profitable trade and lost money. So manage your risk. Also, by being a maker or taker will affect the amount of fees you would get taken. For instance, if you market order in to this, that you are a taker, your fees will be higher than if you throw a limit order out there. A limit buy and a limit sell, right? That means you are a taker. So let's get this down. Oh, well, definitely filled. Shit, not that way. This isn't really what we want to see, right? That hurts. There we go. And boom, shakalaka. Almost instantly stopped. There you go. And that is why we don't take these. Lesson learned. Right there. It is not a high probable trade. All right? There is a difference. There is not a trade to take every single day. I've said this 1,556 times, and I will probably say it 1,557 times. You guys got to be patient. That's where your edge is going. That's where you're going to find the profitability or not. You can't possibly trade these markets every single day and throw out 15 to 20 trades per day and bring home any cash. Now let me show you the difference why this trade did not work versus the reason this trade did work. All right. This is clearly counter trend. I mean, this beast right here was coming in hot, right? There's your 5-minute chart. Coming in hot. Let's go over here to the weekly time frame. You'll see you got old weekly resistance right there, and you'll see that you got your last week's low there. Now that doesn't mean this will hold as support. It's resistance, not support. This would be support. If you don't know the difference, there's a support and resistance video specifically titled in my playlist for beginners. But this is resistance, but that you will occasionally get a bounce from there, right? And it can act as support. And then if we come over here to the daily time frame, there was your daily level. So why was this trade profitable. Your weekly resistance, man. Right? That's the difference. You're coming into a higher time frame, significant area, whereas Bitcoin is literally in the middle of nowhere, in the middle of the daily range. Literally. The only thing you have there is hourly support. Hourly support is not enough to justify an entry. You need daily and weekly levels there to support the intraday support or resistance. That's the fundamentals. That's the backdrop. That's the strategy. Price coming in hot here. First bounce, boom. Up, right to where? Daily support. Look how these 5-minute candles close at daily support and tell me that my strategy has no bearing or weight. Then you trade away from daily support. Here's your second. This is weekly res. This is last week's low. So I'm waiting for the wick to push below last week's low. And then upon resumption, market order in. Stop loss under the wick. Take profit 2-to-1 risk to reward. Look at this. Within 25 minutes, boom. My profit target was met. Trade was closed instantly via limit sell. Boom. On this candle. Out. Then I physically pulled my stop loss up to my entry, which as of right now still is open. It is still open. If price drops down into here, it will ultimately stop out that trade. But the important part is I already made money. I already made my daily goal of 2%. Right? That 0.5% pays for the trade. Or is going to be your unrealized P&L that you have left on the position. Perfect learning opportunity there. This is why sometimes we get to take trades on the live streams and sometimes we don't. This is why it is so important when I tell you I have an edge or I don't. Remember yesterday, all week, essentially, I've been saying that I do not have an edge for a trade today. We did this morning on the pound dollar. But the Bitcoin trade did not work. And that's why, right there. Back to Bitcoin. That's it. Now, this says there's an old weekly res there. Shoals. You've liquidated Jan's high also. Not really good. That's why I said this could get faded. There's going to be a pullback on yesterday's move. You can almost guarantee it. We were looking for a pullback to start the month. Is this going to be February's high? It's possible. All right. But there wouldn't have been a high probable sell trade there either. Not right there. Right? So I guess we was around a weekly resistance. Technically, I'm wrong about that. I mean, technically, there is a old weekly resistance there. So, yeah, I guess you could still take it. This is just going to be chalked up to random market violence. Man, we need to start a movement. We do. Random market violence. We got to stop this. It's getting out of control. What's up, everybody? Glad y'all can make it. We're just going to be chilling today because, like I said, there's been so much high impact news out there in the last 2 days. Price is going to be flying all over the place. It's going to be highly volatile. It's going to be very difficult to nail down these entries. Definitely not wanting to be a buyer on Bitcoin. I'm a bull. You guys know I am a Bitcoin bull. I have been a Bitcoin bull ever since June the 13th, the day we dropped down into the undervalued region of the MVRVZ score. This is when our bearish bias flipped to bullish, right? And you can go back to June 13th and watch any one of those videos or live streams that I put out in June, and you can check me, see if I'm telling the truth or not. Obviously, the black swan with FTX caught everybody off guard, which was here. But yeah, we want a pullback on Bitcoin, a longer term, deeper correction. There is a ton of stuff here, man. Like there, for instance. There's a good spot to look for to see how price reacts. 22,298, as that's going to be a significant daily low. Could be a weekly low even. It's not a weekly low. Where's the weekly low? There's the weekly low. So it's just under the weekly low. So yeah, I mean, I would at least want to see a pullback to that before I start looking for bullish entries again, expecting bullish continuation. But we know that Bitcoin can get on these rips, right? Where it just rips everybody's face off. I mean, I've seen a lot of bears out there, especially the permas, that's calling this the worst financial crisis we've ever experienced before. Haven't put out any videos for like a month because they were like, who cares about these little daily bullish candles down here? They mean absolutely nothing. This is just a bear market bounce, right? Yeah, where are they at? Where are they at now? Man, you took out massive swing highs. Massive ones. This is a big one right here. This is a CPI day. Right there. Big one there. So I would even expect price to pull back to those supply zones. Those are both very significant supply zones that price blasted right through without retesting, I might add. 2 of them right there. Well, technically, this one was blasted through, but you would want to see the retest on the bottom line because that's the technical term. That's the technical supply there. So you would want price to at least come back here to see if there's demand where supply clearly was. Clearly, supply was on this day, not demand, because look what happened next. Exhaustion was the word I was trying to come up with yesterday that just kept eluding my dead, cobwebbed brain cells. Remember, if you were watching yesterday's live stream, I was trying to think of a word. exhaustion, capitulation, accumulation. All of these is what happened down here. You had a selling exhaustion. That means you literally run out of sellers and blop, rips to the upside. This is just a repricing to get right back to your correlation to risk. Once you got that, I would expect a pullback to it at least, right? Make sure there is physical demand here. As of right now, all you have is FOMO going on. That is it. Nobody's buying up here, guys. Not anybody smart. Or not anybody that knows anything in this market. This is where you be a buyer, right? You buy support in the uptrend, but you must let price show you that it is even willing to be support. And I don't mean on a 5-minute chart. I mean on a daily. We want to see daily closes get respected at other daily closes. So here is a respect of support. You traded under it, closed above it. Would I have bought that? No. Why? Because A, that's real close of being an outside range candle, aka an engulfing. It's not an engulfing because the technical definition for an engulfing candle is you must take out the prior day's high as well as the prior day's low to be an engulfing or an outside candle. An engulfing candle and an outside candle are the exact same thing. There is only 3 kinds of candles: outside, inside, and trending. That is it. They don't make any other kind. All right? That's how we're able to take the info that we have and do so good with it. But yeah, everybody that's just aching to get in trades right now, what happened to you or what happened to me is going to happen to you. And it's going to happen to you almost every single time you try it until you clearly hear me say, yep, this is a setup I would take every single time I see it. Those are the times that you want to be looking for the entries. And I'm nowhere near there. Nowhere near there. If anything, I might be looking to try to jump into an intraday short just because of there is no significant highs being made. You are making higher highs and higher lows, but this could be looked at as an ascending wedge, or also known as a Wyckoff distribution formation, a triple top. I mean, there's so many names for it, but what it is it's clear selling pressure, right? There is not much demand up here because price can't continue. It's running out of steam, right? It's running out of steam. You want to be a buyer at support. These swing highs right here. See that? Boom, 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 boom. Yeah, that's something to be aware of. These are typically looked at by pattern traders. Once again, I am not a pattern trader, but pattern traders look at these formations as bearish. Right? Ascending wedges, are typically looked at with a bearish breakdown potential. I mean, it's not really an ascending wedge if you use the wicks or the closes, but you can see the structures of the candle bodies, right? Like, there you go, there. It's a wedge. It's just wedging the wrong way. It's wedging out, not wedging in. Yeah, typically looked at as bearish formations. Your typical bull flags and stuff like that. You want price to be coming down, accumulating down and down and down and down. You want to see something similar to this kind of price action, but angled in the opposite direction, right? That is your typical bull flag pattern or your whatever pattern. So hopefully you learned something today. Few ledges represent. Yeah, for sure. How is the few ledges this morning? Good morning, sunny Florida. Yeah, it is very sunny. We had almost record high temperatures yesterday. Guten Tag. Buenos dias. Yo, 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 took the trade. Yeah, sorry. My bad. Scam likely. Think if I didn't take that, right? You'd probably be up on the week. It only takes a couple of those, man, to totally ruin your week. This is why I am so very, very patient. You have to be. If you cannot be patient, if you cannot have self-control and discipline, you will not ever make it in this game. You got to wait for your edge. I don't have an edge up here. I just don't. If anything, would have been looking for the liquidation break to the downside simply because of how exhausted it's starting to look. Think about how much time you spend up here. And the range. $1,500. Now, this was promising. This was a promising breakout candle. Typically, when you see this and a liquidation of a main swing high, you want to see continuation on the next candle. You don't want to see a flat out reversal. Okay? Flat out reversals are never good. And when I mean flat out reversal, I mean this thing opened the very next day, went up for just a split second, and then boom, took out your bullish breakout candles low. That is a trap. This is a bull trap. And you got a little bit more of a trap yesterday. Now, who's to say that it doesn't hold? I can't. I don't know what's going to happen. This could end up being the low of day. Bitcoin could end up finding support and then running. I would not buy it again. No, I would not. If it gets down here, we'll discuss it then. 22,835. If it gets down there today, we are not taking it at all. That's too much momentum to the downside to be a buyer. I mean, we would take it for a bounce potentially, but just a bounce. Now, I want a deeper correction, and then I want Bitcoin to find clear and obvious support. Show me that it's support. Give me that expansion. Let me know I'm on the right side, right? I'll let you know when we're there. We're not there. I mean, we're trading in the same place that we were trading on Sunday of this week. Today is Thursday. I believe they call that sideways, not trending. not trending. I know it's hard to wait. I was the same way when I was trying to learn this stuff. But if you don't learn how to wait, you will get crushed. Why are you speaking that slow? Are you drunk or something? I don't know why you even ever show up, dude. To be honest with you. I am under the weather, if you can't tell by my voice. I'm fighting the flu. And if you don't like it, you can bounce. But you won't, because you're always here. All right, so moving on. Tomorrow's job numbers will be very important. Obviously, that's what everybody's waiting on. Let's go look and see what Euro USD is doing. The DXY still, oh man, DXY is basically giving back or taking back away all of the losses that it gave us yesterday. So this is a major level down here, that being monthly support. Clearly see that is monthly support. And you can clearly see that it held last month and that it is still indeed holding as of right now this month. So is this going to be the low of month for February? Potentially. Let's see how the day closes out. If you take out yesterday's high, which is right there, even with a wick, that will be an outside reversal candle. That will be a bullish engulfing. It is in a downtrend, so I wouldn't be looking to be a buyer, and I wouldn't. That signal would not have me closing my short either. But my short is up here, right? We took the short on that wick right there. Liquidation wick. A wick is a liquidation wick. We got short right there. That's where we took our short position on the DXY. So I'm not going to close that based off of a daily bullish engulfing at a monthly support. Now, if we get back above the yearly open, which is 103,494, I don't even know if we should use 103,494 as the yearly open or if we should use this as the yearly open. I mean, technically, it's a tick. I don't know why. I don't know what that is, right? But either one of these two prices, I'm okay with calling the yearly open. If we get above this, then I will take half off of that short position. I will cut what unrealized P&L that I have open in half. Because above that is significant, especially if it gets any kind of bullish momentum above that. Day coming back into monthly support. Yep. Chilling on the boat waiting for a trade. Read that. I took 2 winning trades today. I will not trade anymore until tomorrow. This is one of the best advice you gave us. Yeah, I mean, you got to have an edge. If you're not trading your edge, you're just asking to lose money. Broadening wedge, yeah, I guess. broadening formation. Do you only trade off liquidations? No, I do not. As a matter of fact, I hardly ever trade off liquidations. 90% of my trades come off of supports or resistances in the direction of the trend. We do the liquidation trades on news events, high impact news events. Because in a normal trending environment, like say for instance here, never mind the liquidation, just boom, there's the breakdown. This is where you would expect price to have held, right? Because this does look like a reversal here. It is a reversal formation. There's a low, lower low, then higher low, higher high, taking out this swing. So once you took out support, this should have been support for another bullish push. But the trend is overwhelmingly down. So once you took that out, then we would have been looking to sell any retests into this area. And then we would have been watching this price and this price, so on and so forth, right? You don't always get an entry. You don't always get them. But also taking sell trades once an asset has declined for literally 4 months in a row, you're starting to get a little bit long in the tooth. You're starting to get a little bit overextended. Excuse me. So we don't necessarily want to be taking short trades in an overextended short market. We want to wait for what? Resistance. We want to wait for a test of resistance. Now, you don't have any resistance levels other than your monthly opens and closes, but they're all bearish, right? There's no bullish candle in this downtrend. So you don't have any of those monthly resistances, but this is where by dropping down just one time frame, like the 2 week, you clearly have a 2 week resistance right there. So even getting above the yearly open doesn't necessarily mean that I would start to get bullish again on the dollar. Not until it cleared above this with a 2 week candle closure would I start to be concerned. And then once again, there's always the fib traders that could absolutely come back in and push it right back down. So the fib traders are traders that just fib ranges. That's why you see a lot of times measured moves will work, because you got algos and bots that are trained to do this stuff. So technically you could pull back all the way to here and still find resistance and roll over. But Fibonacci's will get you in trouble a lot if there isn't any actual technical level there to corroborate the fib or correlate with the fib. Not correlate with it, but well, yeah, correlate. You would want it to be really close. And then you would like to see some confluence, like maybe another kind of resistance, like a trend line or something, right? The more confluences you have, the better it is to watch the area. But I mean, this downtrend is pretty aggressive, and it has been for weeks and weeks. And we nailed the top of it, the absolute top. of the USDJPY. We didn't take the entry on DXY. We used DXY to give us the signal. So what I did on the day that I took the short trade on USDJPY is I waited for the liquidation wick, right here. So when we took out the previous week's high, I took the short on USDJPY. Right there. So if I show you down there, Monday the 17th, October 2022, go back to DXY on this, Monday 17 Oct 2022. Okay? That's literally, that was the signal. Take out last week's high, and then if it's going to be bearish, we want to see it take off from there. And that's exactly what it did. And since I can't trade the DXY itself, my favorite currency to take the short on was against the US, or against the Japanese yen, because the Japanese yen had been so baked. Right? I mean, it was cooked. This thing had just been going in one direction only. One direction only. Whereas other assets did not have this size of an actual move. So the way I looked at it was, if I am willing to try to short the dollar at the top, I want to short the one that has the most room to go lower. And this was my favorite. And we were talking about it for weeks. We were just waiting for a setup. We were just waiting for a setup. We did get stopped out twice on it, though. We did make money on it on this pullback. However, when it came back, it stopped that trade out. And then I do believe we got stopped out here on this week. So we were net negative on the position until we nailed out. And just by nailing that, that more than made up for those original two stops. Because this trade, if you see the size of it, it's like a 75-1 risk to reward. So if you keep your risk tight and you're only losing 1% per trade, and then you get in something like this and nail a 10-1, well, then you've more than made up for those two losses. Then you take profits, move your stops to break even, and then any continuation you get, like this, it ultimately ends up paying you more than the original trade that you took did. Right? So that's the reason why we trade this way. This style, if you will. We look for the high probable areas for reversals, but we typically don't like trading reversals. So your bear market, if the traders that are looking for the bear market using the fib here on this stretch or this leg down, they were getting short in here. They have been stopped. Their game is over. So we do expect continuation, because this is a legit breakout. You've broken out above trend lines. You've got moving averages repairing. You've got the whole structure of the market is changing. The whole structure of the market. Let's see here. Well, anyway, especially on the Dow Jones Industrial, it's completely structured itself bullish. Now, I went back in time all the way back to '08 and looked to see if at any time did you have a repair like this on the daily during the '08 crash and then roll back over and continue with the bear market? And the answer to that was no. In fact, it's never happened. Ever. Now, there were a couple times where you just had random down months after the '08 crash. For instance, here, this is when you made that ultimate repair. Your 200 simple in red should always be trading under the 200 exponential. Once the blue line, which was the 100, that was the last moving average to correct itself on this rally. So this would just be looked at as a bear market pump or a bear market rally. And you can see the sellers came right back at the 200, right? Off the lows, boom. So you did get above your 21, you did get above your 50, you did get above all that, but then the sellers came right back through here. But this is how you pretty much knew the bear market was over. You set in a lower low, lower than this low, and then reversed course. So this was a liquidation run. This swing low, this lower low right here was a liquidation run on these lows. And it took 4 days to play out. But once the repair was made, you can see that your bear market was essentially over. You did get a time when you did have a few down weeks here. And then you did have another time where you looked like you were going right back into full-on bear market mode. But check the date. That's 2 years after. Well, a year after. A little bit more than a year after. Your low was in. You got back under, but you never really got structured bearish all the way. So when I mean structured bearish all the way is right here. So why ain't that working? Thank you. So let's zoom in on this part. Notice how your 21 is like basically ripping through all the other ones. So from this point here, once you got under the 50 and then started getting space between the 21 and the 50, notice how you were getting space between the 50, the 100, same for the 100 to 200, same for both 200s. That's indicative of a bear trend continuation, right? You never did that again. So that's what you would want to see happen here for that bear market continuation. You would want to see all of these moving averages flip. Now, naturally, you're going to miss a big portion of the move if that's what you're waiting on. So to keep things simple, there's your yearly open. If you get back under that, you have permission to look for shorts at resistances, because the yearly trend is now flipped, or the yearly candle is now bearish. But right now, the structure on the Dow Jones Industrial Index is bullish. And as long as you're trading above 33,148, I suspect your buy the dippers will return. Because of this. I mean, that's full on repair. You have full on repaired the damage from the bear market. In the sense of moving averages, obviously. Look where you are here. Overbought. Check the 50. Hold it. You're above it. The bulls are clearly in charge of this market. Now over here, you don't have that full-on repair yet. See how the moving averages are still all discombobulated? This red one here needs to get above the purple. Or wait, no, that's a correct move. Sorry. Your green and blue have to push up with the yellow, obviously. And once you get the blue one, because the blue one's the 100, once this one gets above the purple one, you will have full-on corrected this bear market as well. There's a lot of data out there that suggests that this isn't going to be like an '08 style crash either. We went over that yesterday in the later parts of the stream. Yes, I am still in my long. No, wait, sorry, no. Chase, I am not in the long from January. The long that I took in January ended up getting stopped out from the whatchamacallit, FTX, right? So I think we closed those positions manually once we understood that we had essentially put in the highs in August, and we started to roll back over through here. We just went ahead and closed those positions because we got short here on this swing. Then we shorted here. We actually shorted the FTX move that day. It was on this day here. Remember, price went down like far. It went down like 6-7%, and then came all the way back to the open. Well, when it came back to the open, we took a short entry. Boom, down. But we took profits, moved stops, and then we flipped our bias once we realized that we couldn't really get any more downside continuation, and we were going ahead and saying, because once this occurred, there was like a week and a half here. There was some on-chain data that suggested this was capitulation. I didn't know that it was capitulation. So, like, when I was looking at this data here, for instance, right, I didn't know that this was capitulation. I could flip it to the 2-day and see that it might have been capitulation, because that's definitely what a capitulation candle looks like. Big wick to the downside. But I didn't know. You will never know for sure anything. There's no such thing as a confirmation in the marketplace. But we still had a bullish bias. We knew that this was a black swan event, and we were very hesitant about getting longs the next few days because we were afraid that maybe there were going to be a few more exchanges drop. Because some of these smaller exchanges will actually sell order flow to bigger exchanges. So, like, anybody that was essentially using FTX's data feed for their own client base, they would have ended up going out of business as well. But we did know we wanted to be a buyer at the low if we got a rejection at the low. So this is how we played it. There's our bear market target. This is where we flip our biases to bullish if we get a rejection. I don't know how long it's going to take. Right here. This was the candle where I took the long. Boom. Right there. Now what you would watch, or what we were watching first and foremost, because as new data comes in, we have to give weight to the new data until we start to get the daily closes that we want to see. This support. Which at the time would have made this like the daily close. Or this. I don't know if time had changed here yet or not. I don't think so. So 2000 hours was still the time when Bitcoin's daily was closing. So this would have been the daily support here. So then we would have been watching these two prices. This as an intraday support, this as a daily support moving forward. Remember, we're long, but we know it's trending lower. We can see that. Clearly, we can see that. This here was good. Because at that point, you formed a daily support. And this daily support was crucial for holding. Remember, we got long under the white line. And I have this on video. all this was done live. For people like that just like to come in here and bust my balls, like Task 550, for instance, who is always nothing but a hater and is always here. This is where we were watching. So any daily closures back under this would have us probably taking this position and closing it. But at this point, all of our risk was already off the table. Like, we couldn't lose money no matter what happened because we took profits on the way up. As price started to expand away from the area, we scaled out of the position the same way as I do every single entry. I take profits and I move my stop up to break even. So, because I know from historical data and my P&L that if you are able to do that, those trades will end up paying you way more than the original trade you took in the first place. And you're setting in the position risk-free minus the unrealized P&L. You're always going to have some sort of risk on the table when you're in an open position, right? But you can't lose your money. Your money cannot be lost. You've made it already. It's too late. It's over. That's in the past. So what positions we held here was just unrealized P&L. And there's no point in going back to the hourly for this. As you never came back to support. And this was making our bias stronger to look for new bullish entries. So for this entry here is still open. I still have two accounts. The Coin M futures and the USDC M futures accounts are both long from this price here. 16,531. So I am no longer holding this position open either, because one day on one of these streams, it was a stream on YouTube, a public stream, everybody wanted to trade, and I was trying to set up a trade real quick, and I accidentally used this account that I had down here. So when I hit the buy button, it automatically adjusted my position higher, right? It gave me a higher cost basis because I entered a new position with new leverage, a full size position higher. And I was very upset because obviously just to hold this position, like I said, I don't know that that's going to be the bear market low. How can I? I can't see into the future. I don't know that that will ultimately be the low, but I will hold the position there until price gets back there because I can't lose any money. But ultimately, I screwed that up. So I don't have as pretty of an entry on Bitcoin as I do on the USDJPY, but the bullishness, you can tell, was aligned, right? because overall my sentiment on the market was a shift was coming. A market shift was coming. The closer and closer we got to January, the more and more strength and resolve I had in looking for bullish Bitcoin positions. And then here is me literally the day before. Well, we got to go pretty far. Damn, I tweet too much. Jan 3, December 31, the day before, right? December 31, 2022. That's the last day of the year. This was the tweet. Since this is the first year in Bitcoin's history that it posted 4 negative quarters, and since this last quarter has been a record on volume on Coinbase's exchange, I can see a reversal coming soon. And then here, no, right here, December 31, same day, these two tweets were posted, probably within an hour to one another in the morning. Happy New Year. Might do something crazy and buy some more Bitcoin on the very first day of the new year. That was a day before. That was this day right here. Okay. One more day. Boom. Where did I buy? Daily support. Intraday chart. Where does it look like I was a buyer? Knowing my style, my strategy. 9 a.m. in the morning, 8 a.m. in the morning, 9 a.m. in the morning, 8, 9, 8, 9. This white line is daily support. That was my entry. Or it could have been over here. I know my entries vary in prices. One is like 16,540 and one is 16,530. So there's like a $10 spread because I fired the orders off manually. I did it on all three accounts because I trade the futures side on the platform. So I can trade USDT, Coin M futures, which is the inverse swap contract, and then the USDC futures. So I went to all three platforms when this occurred, when this move happened, and fired off buy orders. Boom, boom, boom. Market buys, levered up. Levered up. Big ones. So naturally, as price trades up into resistance, I took profits on all three accounts. Then I moved my stops to break even, and the rest is history. Did I know that was going to happen? Of course not. As of right now, I don't want to show you the money, but I can do this. That's what it says on the USDC futures. Obviously, I am not up 5,475%. Okay. I closed 70% of the original position size. But the account is up multiple hundreds of percents. Multiple hundreds of percents. I would say it's closer to 1,000% at this point where it currently is. 5475. Remember that number? Well, let's write it down. So this way you know I'm not lying. 5475. Here. 5475. All right. And then go to the coin M side of the perpetual swap. Wait a minute. That looks exactly the same. Well, the price is close, but it's... And then I do the same thing. Right here. 5488. 5475 versus 5488. So multiple hundreds of percents I've made just by leaving 30% of the original position open. Because even though that 30% is a much smaller position than the one I originally took, it is still got leverage on it. When you take profits and move your stop to break even, essentially all you're doing is you're booking gains. You're sending an instant bump to the P&L, but you are also eliminating any possibility of any scam wick to come down and make you lose money. Now, the money you will lose will be the unrealized P&L. So if tomorrow we wake up and there is the nastiest candle anybody has ever seen, and it comes all the way down to here, then that 5,000% or whatever of unrealized P&L will be wiped out. But, and here's the best part, I will have lost $0. Not 1 cent of my money will have been lost in that transaction because I already got paid on the first 3 entries. So now what I have done is I closed the tether side completely down. That's why I only am long on 2 of them. I closed the tether side down. I transferred the majority of the profits that I made on that trade off exchange, right, to cold storage. And I left a very small amount on exchange. Then I took that amount, I leave that in spot. Then I rotate it from spot to the futures account. And then I will start trading that small amount again back up, right? So that one is open to be able to take intraday short positions. So I know it doesn't make sense. Wouldn't that kind of just offset whatever money that you're making in the long? And then it kind of doesn't, right? It just doesn't. Because as long as I'm fumbling around like this, the gains on the cold storage wallet plus the gains on exchange on all three accounts are consistently moving higher. Right? So in a sense, I'm managing three different cryptos. The USDC, the USDT, and then Bitcoin. And all three cryptos are making money. I save one of them for capitalizing on any short opportunity that may come up vis-a-vis this. So this is how I'm able to be long and short at the same time. I just am not doing it with Bitcoin. With the Bitcoin, for the inverse swap contract, I'm only trading Bitcoin's inverse swap contract long from this point. I am only opening leveraged long positions from this point and have been since that point, right? So I'm not looking to ruin the cost basis on this original entry, but I will as soon as I get a decent pullback. Because it's already videotaped, recorded. It's already in the books. Profits already been made, already been transferred to cold storage. The position has already been proven. Now I can move on and look to open up brand new long positions as Bitcoin makes its ascension. And if it wants to go lower and create new bear market lows, guess what? We will short it to infinity. We will short it to zero. We will short it as low as it wants to go. As low as it wants to go. And I would do it on the inverse swap contract as well. It doesn't make much sense to short it on the inverse swap contract. You can still make money in a down market and still accumulate more Bitcoin. But obviously, if Bitcoin's price is collapsing, you're just hedging essentially your cash position, if that makes sense. So like it's not really a gain at that point. It's more or less just you're not losing any of your money as long as you are cashing out. You must take profits. I wasn't going to start cashing out of Bitcoin because, like I said, since I've been doing this, the account has grown significantly. I now own way more Bitcoin than I did when I first started, obviously. In order not to lose it if Bitcoin were to have a black swan event and die completely, I am not losing cash. I am simply losing the profits that I have that are unrealized. Because by this time, I've already made back my money plus much, much more. So in a sense, I am playing Bitcoin with the house's money. I don't have to risk my money anymore on buying more Bitcoin. As long as I have that inverse swap contract, I can just leave Bitcoin long and leave it long with a ton of leverage. And as long as it goes up, it's just going to accumulate more and more and more and more and more Bitcoin. I do believe Bitcoin will be worth a lot more money in the future. This is why I short it mainly with Tether, like the USDT versus Bitcoin, or BTC USDT. I'm going short and long that. That's to make physical capital, because Tether is easily converted from USDT to USD through Coinbase. I don't care to hold USDT, right? I haven't converted much of that because that becomes a taxable event, right? The instant you convert all that Tether to cash, it becomes a taxable event. So I am kind of just sitting on it in cold storage, but ultimately, if cryptos were to take a turn for the worse, naturally, I'm going to take a hit like everybody else, but it isn't going to be my day-to-day living expenses that takes a hit. It's going to be unrealized profit and loss that takes a hit. So in a sense, I'm not risking anything by trading these markets at this point. But obviously in the beginning I was. You have to get started, so you're going to have to at least put some cash on the table somewhere. But if you know what you're doing and you're able to do stuff like this, then you're going to be fine. You're going to make your money back. Then you could just play with the unrealized profit portion and grow that. So that way, if we have a meltdown in cryptos, you don't lose any of your money. You're only losing unrealized P&L. You're only losing the crypto you didn't convert back to fiat. But it's not your money. And that's the point I'm trying to get all of you to get to. Because that's minimizing your downside risk. So like, this was the conversation that we already had. Like, the channel members and everybody's already heard this. That is how you control your downside risk in the crypto game. At first, you are going to have to risk physical capital, fiat capital. But if you get good enough and be patient enough and wait for high probable setups and do it the right way, do not overtrade, wait for the highest, most probable setups, and only take those. Do everything right, start making money. Once you start making money, then it becomes easier. Once your equity curve growth stops going lower and it starts going higher and then starts trending up year over year, That's when you really start to see those gains, like insane gains. Not in the beginning. It takes time to build up a portfolio. To build up a portfolio that you're only risking unrealized P&L. The smartest firms in Wall Street are not going to risk shorting Bitcoin with funds. Like they're not going to take $1 billion and place a short on Bitcoin with any leverage on any exchange. They are not doing it that way. There is unlimited risk doing it that way. And firms do not take positions with unlimited risk. They would have to get the firm manager to approve that, and there's no way he ever would. He would look at you as if you were some kind of idiot. If you went into his office and said, hey, I got a great idea. Let's short Bitcoin with 1 billion US dollars. An asset that can literally move 5 or 10% in one day. You want to go short with no options or nothing to protect your downside risk, just a stop loss, huh? Okay, yeah. Oh, on an exchange. Okay, yeah, sure. Yeah, you're fired. Get the hell out. I want you to pack your desk. Get out. You're done. It's over. They don't do it, man. You shouldn't either. But there is potential for, unlimited gains to the upside. You just got to make sure you're managing your risk. You can have unlimited losses to the upside as well. Like if you go long or if you long with any leverage at all, that gives you more than you can lose just by going 1x, 2x leverage. That already puts you in the boat to lose double what you're allocating to risk. Triple on 3x. 5x is 5 times the money you're willing to lose. It's insane. So when you see people posting gains like 1,000% and stuff like that, it's either on like really tiny accounts, like $100 or $200 accounts, or they literally have blown out multiple accounts and they finally nailed one, right? Either way, net, they're not making money. They're not making those kind of returns. Like, I'm not making 500% returns week after week in crypto. It's closer to 20. And sometimes it's not, right? Because sometimes I close out the week red. But the goal is to close out at least 50 of them green. I don't like going into the week red. That's one of the most despised things that I have. I hate it. So I try to actively avoid it. I would much rather not take a trade at all that week and go into the week neutral than to go into the week with a negative P&L. That's where you need to be in order to beat this. If you can't get there, you will never, ever beat this. You have to keep money in order to trade. If you keep losing it and feeding it to the exchanges, they're just going to keep taking it. I mean, think about it. gambling is legal in America now. Now you can bet on anything, really, in America with an app. I guess they decided, hell, they're doing it with Bitcoin. We might as well let them do it with basketball, baseball, and football. But the house always has the edge. Always. Their edge is small, but they have the edge. They have it. Bitcoin's back to green on the day. Hey, there's just no way to predict this. That is random market violence. Now, when I'm trading Forex and stocks and options, I am risking capital, right? I am risking capital. But that's where I make my living from. So my crypto portfolio is essentially risk-free. It's just got a ton of unrealized profit that I haven't converted to USD. It's all unrealized profit. I've already made my money back plus multiples of it. So now the portfolio that I've actually been able to build up is significant, but it is still unrealized P&L. So literally the percentage of my actual wealth, not counting unrealized profit, because you can't count unrealized profit as your net worth. They do it all the time. People do it all the time. The IRS will do it. You know what I'm saying? If the government looks at your portfolio and shows that you're up 580%, they're going to count that as your net worth, regardless if it's unrealized or not. But technically, if you think about it, unrealized P&L isn't anything. It's exactly that. It's unrealized. It means it still isn't yours. It's not yours until you realize those gains. So that's what I would lose. That's what I'm risking. That. S&P 500 didn't do what Bitcoin did. See here? We would have had better luck playing S&P 500. Let's go into the intraday and see. No, yeah, it didn't. We would have had better luck playing the S&P 500 than playing Bitcoin. What time was that we took that trade? 9:45. That was over here. And there's clear and easy support. It's old resistance, but it still is an area that we would have been watching. And you drop down to your 5-minute, and then this is what you get. This is what you want to see, right? At your level. You don't want to see price do what Bitcoin did where we were looking. Like this is... But Bitcoin does that. It's the riskiest asset class in the world. That is why. Sometimes Bitcoin will respect those levels like nobody's business, right? It'll throw a wick, a perfect wick right into it and go. And then other times it just does this. Drops right through the floor. But the S&P 500 held up. We would have been better off looking for longs there. But like I said, we can't see into the future, so there's no way we would have known that. We would have had the same info, the same data, and nothing to go by other than last week's high. Not last week's high, but this weekly high. That's all. Like when you're looking for your intraday levels of support and resistance, please look for them close to your major levels. I wouldn't suggest at old weekly highs and lows unless you're seeing clear and obvious signs that the level is holding. Because it still is an objective price point. It is the high. It's just typically those wick highs and wick lows are targets. They're not areas for entry. They're profit-taking areas. What I mean by that is you would have already been looking for this area to be hit based on the fact that we know liquidations occur, right? So this was the trade on the S&P 500 this week. This is considered a Heath level. It is demand. So as the weekly dropped, and how many days did it take? Monday, Tuesday. What do I always say? The high or low of week is usually in by Tuesday or Wednesday. On Tuesday, you traded down to the Heath level. That's your higher time frame level. And it's also correlated with a daily resistance. It's not just a weekly demand zone. It is also daily resistance. There's your breakout. There's your test. There's a test. There's your trend. There's your trend. Retest. This is an uptrend, right? Up, down, up, down. You look to buy off support in uptrends. Tuesday would have been the best entry on the week on the S&P 500 futures. Tuesday. And it would have been here. That's quite the reaction at that level. So now you have an intraday support to watch. And he closes under that, and then you're skeptical. But that was your probably one and only test there. So it'd have been difficult to get in on that, but there are ways and methods that you can just wait for price to get back above it, then get long, throw your stop under the wick. You'll know if you're right or wrong on the next hour. Because if you get more downside continuation, you're going to get stopped out. It's that simple. What time was this? 6 o'clock in the morning. So you would have had to have a futures account to even attempt to buy that. but that's your weekly low at the demand level, at the Heath level, at the higher time frame, multi-correlated daily resistance, weekly demand, confluence. Remember that confluence I discussed? Those are your higher probable setups. That's when you look for your intraday stuff. One could have simply said, because you did technically close below it on an hourly basis, and you didn't set any support, right? You did set a clear support here, and then you broke down, so you start trending away from support. You could have simply waited until the open and looked for entries then. Because at the open, you're getting back above this. So then you set in here a new support, a higher support here. So you're starting to see a trend take shape. Old support, new support, weekly Heath level, big level. This is the level you want to get in on, but if it doesn't give you an opportunity there, and then you see clear reactions like this, then that gives you a little bit more weight to kind of like, well, that's the last one. And then you could even say, here is an old intraday supply zone. Nothing happened, but you got close to it there. But you could simply say, here's the close. I'm going to buy it as soon as it gets back above the open of this candle. And then I'll take my chances. I'll throw a stop under the wick low. And then you get expansion. That's what it looks like on the 5 minutes. So it played games, right? It played games. Wait till 10 o'clock. Because you know 10 o'clock is the hourly close. Don't try to buy it or sell it anytime in the middle of 10 o'clock. Because 9:30, 9:25, 9:20, look at all this garbage would have chopped you right up. If you would have bought it here and put your stop under that wick would have stopped you out. Right? It's not easy. If this was easy, everybody would be doing it. But you got the idea, right? You're already bullish because you're looking for longs, you're looking for supports, you're watching specific areas, high probable areas that other market participants are watching. And you know that other market participants are watching those levels because of how price reacts when it comes into those levels. You can just simply see it. On Tuesday, remember, the day that we are looking to try to catch the weekly low or the weekly high, naturally we wouldn't be looking for the weekly high on Tuesday because Monday the high is up here. And even on Tuesday, which you didn't make, you made a higher high on Tuesday later in the day. But you know you're not looking to short down here because if the weekly high is in, or if there's a possibility that the weekly high is in, then you would be looking to sell these rips. You would be like, well, maybe the weekly high is in, so I want to sell into resistance. I want to sell into the rips. But don't do that in an uptrend. In an uptrend, you're looking to buy support. There is the most volume traded on the day. And that was that hourly level that was created, that we were watching to be a buyer. And it's right around the open of the day, the 9:30 in the morning New York open. So you would have been looking for long opportunities right in here. Because your 9 o'clock close sets the support. 9:55. Boom. Let's blow him up. This candle sets hourly support. The opening price of this candle. That is the price that you're looking for entry. All you're trying to do is manage your risk. Where could this thing wick to? Where could I be wrong? Is there somewhere else I can get a stop to where I can justify the trade? That's where you use just simple risk to reward. Like, is there even enough risk to reward in this trade to justify an entry? I'd say so. Right? So you know that there's a pretty good chance that the next candle is going to try to take out the low of the previous candle. So first and foremost, always try to wait for that. It doesn't always do it. Like this candle closes, this candle opens, and you just get a little bump down and go. But that's in the middle of expansion. There's no bearish candle in there. Here is the only bearish candle once you bounced off of a massive level, a level that you were expecting a bounce from. So this becomes your favorite place to watch. And then when you see something like this going on, well, you know you're not looking for shorts because you closed an hourly up above this swing high. That would cancel any short opportunity. If this candle closed under, then you would probably be trying to short it, but I still wouldn't recommend it because you're looking for Tuesday morning either for the low or the high to be set on the week, Tuesday and Wednesdays. So naturally, you're just going to have a bullish bias, expecting that the high, because I have a rule that I've said a million times. If I'm going to be bullish on a weekly advance, I typically want to see the first 2 days be bearish. So if I'm looking for a bullish weekly expansion, then the first 2 days of the week, I want those 2 days to be bearish, as that tells me there's a pretty good chance that the candle is doing what it does. And candles do this. They open, they set a false move, then they expand, then they contract, then they close. And then you repeat the process the next day. That's what a daily range looks like. A daily upside expansion range. This day's complete. What happened? your daily open, you traded down to the weekly Heath level, then you had your expansion, but on this day you closed on the highs, so you didn't even have this little pullback. Just be aware of your surroundings. Be aware of what time you're even trading. Be aware of what day of the week it is. Be aware of these little subtle hints and clues and stuff that I say on these videos, because it's price action. And that's how price action works. So just by knowing price action alone and nothing else, no fundamentals at all, gives me the opportunity to take entries at places like this. And then catch stuff like that. Just because I understand the basic fundamentals of price. When it's chopping around sideways, you're going to get eat up most of the time. Obviously, the strategy is a trending strategy. If you're going to trade the ranges, then trade the range and don't expect continuation. So remember how I told you always revert back to the old support earlier in the video, earlier in the live stream? Here's a perfect example of that. This is support because it's the lowest close before price traded away. So you set in a closing bearish day. The very next day you traded lower than the previous day's low, but closed up on the day. You closed bullish on the day. The next day you got bullish expansion. That would make this the lowest closing bearish candle. That's support. Notice the breakdown here on this candle. This is a trap. This is a bear trap. It's a legit bear trap too, because the breakdown price is the midpoint of that candle. So that would give me more, like a heavier leaning bias to downside continuation, unless, and this is very important, the very next day, boop, turns out to be a trap. Boop. Did you take out the high of this candle? You did. So instead of using this candle for support, did you touch it? Nope. Did you touch it? Nope. 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 Revert back to the original support. Did you touch it? Yes. Was there a chance for bullish entries? Yes. Did you touch it? Yes. Was there a chance for bullish entries? Yes. 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 Did you close under it once the trap was sprung? Trap set, trap sprung. This is accumulation. These guys are stuck, and these guys know it. You see what I'm saying? These guys are stuck. Anybody that got short at 38.11 and under, they are freaking stuck, baby. Where's their stops? Right there, more than likely. If they're trying to avoid a loss and giving the trade room to work, there's their stop. They're stuck. These guys know it. See that? It's clear as day to me. I don't understand how it's not to everybody else. Like, this is the buying zone right here. Would I have known on this day that this is going to happen? No. There's no way to know that. In fact, to me, this looks like it's getting ready to take off. So technically, I probably would have taken that entry. But this is also why I take profits, because I've done this so many times where I was right on the market direction. I was right on the reversal. I was just too damn early. Too early. So I get smoked. But I made money on the original entry, guaranteed. That's a daily candle. I guarantee you I would have took profits on that move to the upside. And we must start to break even. This candle would have got me out. But this close, as long as it's above that, means this play is still intact. Like, I can go for this play again. I just need a retest of this level. Did I get it on this day? No, I did not. So I still got to wait. And I'm waiting for this price and only this price. So if the next day opens and goes away, guess what? This is no longer, I have to wait. I have to wait for a whole new setup to present itself. I have to wait. There is no setup. I missed it. It's it. It's all there is to it. There will be another opportunity. On this day here was a perfect opportunity. Absolutely beautiful. Stunning. Let's go see what time it took place. There it is. There's your liquidation of your previous day's low. 8 o'clock in the morning. There's your entry. And you've already taken profits. Now your stop is moved to break even. Now you're in for the ride. However far it goes. You're looking at multi-days of price action there, right? And that was your entry. It was so sleek, so slick, and so simple. I just waited for the daily low liquidation, the previous day's low. This is still the price I know I want to gain entry, all based on just the fact that you identified that as the trap and this as the trap is sprung. These guys are freaking stuck. And I can expect price to at least get above that swing high. And it does it in one day. Stuff like this you will just learn over time. But you're not going to learn it anywhere else. Because no one else is teaching it. No one else even knows about it, I guess. And it's objective. There's nothing subjective about that price. All right. We lost basically everybody, but there's still 40 of you in here, or 33. So we'll go ahead and wrap it up since we lost the damn trade. Looks like we should have taken the entry on the S&P 500 instead. You'll have that on these big jobs. Bitcoin did not play out for us today. It is all good. And yeah, I ate a loss on that. All right. I took a loss. So I don't always win them. That's proof. You need to trade and manage your risk. You guys have a fantastic rest of your day. Guess what tomorrow is? It is NFP. Tomorrow will be an eventful day. I'm sure of it. We will go live at 8 a.m. I don't know if we'll go all the way to 10 or not, right? But we'll definitely do NFP. And if we don't get a setup for NFP, which is entirely possible, because however Bitcoin closes today is going to be very relevant as to what we're looking for tomorrow morning during NFP. Of course, if we close above daily res and above some other stuff, then naturally we're going to have more of a bullish bias, but I hate buying the tops like that. But if the S&P 500 and the Dow Jones is structured like this, man, it's clearly bullish and it's clearly breaking out. So we're clearly going to be watching for today's low to get smoked during NFP. And if it does, we'll see if we can throw on a long position, catch a few pips, few percentages, see if we can make our money back or not that we lost today. We'll give it a shot tomorrow morning at 8 o'clock. Make sure you guys trade safe. Make sure you guys trade smart. And I'll be drunk then tomorrow too. Make sure you show up to Ask 550. I'll be drunker than I am today. You guys have a fantastic rest of your day.